let's dive right in. China just put restrictions on gallium exports. Now, if you don't know which miners control the rest of the world's supply, your tech portfolio could be in serious trouble. Today, we're going deep into this hidden battle for the resources that, honestly, power our entire future. We're not talking about oil or gold here. We're talking about the elements that make our modern world, well, possible. And we're going to see how this huge geopolitical showdown is creating a brand new class of winners and losers. Look, this isn't just some abstract geopolitical drama. This is about your money, your portfolio, the technology you're invested in, the phone in your hand. It all depends on this incredibly fragile supply chain. And that supply chain is being weaponized as we speak. The rules of the game are being completely rewritten. And if you're not paying close attention, you are going to get left behind. And here's why you need to be paying attention. Look at this number, 98%. You know what that is? According to the U.S. Geological Survey, that's how much of the world's gallium China produces. When one single country has that kind of a chokehold on a material that is absolutely essential for military hardware and advanced chips, it's not just a supply chain problem. It is a massive strategic vulnerability for everyone else. So here's our game plan for today. First, we're going to break down China's mineral choke point and really get into why it matters so much. Then we'll zoom out and look at how the world is basically splitting into two economic teams. After that, we'll uncover the really big opportunity here, the rise of what we're calling neutral miners. Then we have to face the brutal truth of investing in this world in a section I've called the miner's lottery ticket. And finally, we'll arm you with a geopolitical investor's playbook so you can navigate this crazy new landscape. Okay, let's jump into our first section. To really understand this whole conflict, you have to understand the weapons being used. And in this new economic Cold War, the weapons aren't missiles, they're minerals. The two elements right at the center of all this are gallium and germanium. You've probably never heard of them, right? But they are the secret sauce in our high-tech world. And China's control over them is, well, it's pretty much absolute. We're talking 98% of all gallium and around 60% of the world's germanium. That's not just a big market share, that's a monopoly. And it gives them an incredibly powerful weapon in any trade fight. So why is this such a big deal? I mean, just look at this list. We're talking about the guts of our most advanced, most critical technology, the AI accelerator chips that are fueling this entire revolution, the missile defense systems that are supposed to keep countries safe, the 5G base stations connecting us all. All of them are completely dependent on a steady supply of these exact elements. So restricting their export? That's not some minor trade tactic. It is a direct threat to another country's technological and military edge. Okay, so let's zoom out a little bit. This whole mineral choke point, it's not happening in a vacuum. It's actually a key move in a much, much larger chess game, the great economic breakup between the world's two biggest economies. And this conflict is heating up fast. I mean, just look at this timeline. From 2025, February 4th, a 10% tariff. Just 1 month later, it doubles to 20%. By April 2nd, it's a jaw-dropping 54%. And what happens 2 days later? China hits back, not just with their own tariffs, but by pulling the trigger and restricting the export of those critical rare earth minerals. This is tit-for-tat escalation, and it has enormous consequences for, well, everyone. So what's the big takeaway here? It's that we're literally watching the formation of two separate, competing economic worlds. You know, that whole era of easy, frictionless globalization? Yeah, that's over. A new world order, one that's defined by strategic alliances and fierce economic competition, is taking its place. On one side, you have the US-led bloc, and their main goal is to keep the US dollar on top. And on the other side, you've got the BRICS bloc, and they are actively trying to de-dollarize trade, to move away from using the dollar for everything. And this isn't just talk. We're seeing it happen. China and Brazil just made a deal to settle trades in their own currencies. Russia is shifting its reserves over to the yuan. These aren't just symbolic things. They are real, fundamental shifts in how the global financial system works. Okay, and this brings us to the real heart of this whole explainer. Because as these two giants are slugging it out for economic dominance, a third group of players is quietly stepping out of the shadows, and they are ready to cash in on the chaos. This standoff between the US and China is creating a huge power vacuum. The West is now desperate, and I mean desperate, to find new supply chains for these critical minerals that are outside of China's control. This creates an absolutely enormous opportunity for countries that aren't firmly on Team USA or Team China. They are becoming the new indispensable kingmakers in this global resource game. And here are two perfect examples. First, you've got Brazil. Now, they're a key member of the BRICS bloc, but they're also a massive supplier of iron ore. And at the same time, they're getting absolutely hammered by cheap steel being dumped by China. So you see the tension there, right? It puts them in this really interesting, strategically neutral spot. Then there's Vietnam, totally non-aligned, a huge manufacturing hub, and, this is the key, it has the second largest rare earth deposits on the planet, mostly untapped. So now Western companies are pouring in, searching for these qualitatively undervalued miners who could become the next big suppliers. This is the reshoring of critical minerals happening right now, in real time.
But hold on. Before you run off to invest in a Vietnamese mining company, we need to have a serious reality check. Because this massive opportunity is wrapped in an extraordinary amount of risk. Let's get into a section that, well, it pulls no punches.
I just love this quote from Charlie Munger because it perfectly captures the kind of healthy skepticism you need in this sector. The mining industry is just littered with broken promises and spectacular flameouts. So just remember this quote as we move forward. You are stepping into a world where hype often runs way ahead of reality. Okay, let me be as blunt as possible here. Investing in a small exploratory mining company, what they call a junior miner, is basically a speculative bet. It's no different than buying a lottery ticket. In fact, something like 90% of them fail before they ever produce a single ounce of anything. The potential payoff, sure, it can be huge, but the overwhelming probability is that your investment is going to end up being worthless. And why is that? Well, because finding the minerals is actually the easy part. And this slide shows you the typical path to failure. We call it the permit death spiral. It all starts with tons of excitement, a big discovery, but then comes the long, soul-crushing wait for permits. Years go by, legal challenges pop up, and all the while, investors who have to keep pouring money in to keep the lights on, they just get tired of waiting. The money dries up, and finally, bankruptcy. And in that scenario, the shareholders, the people who bought the stock, are almost always completely wiped out. The debt holders, the ones who lent the company money, they get to pick over whatever's left. So given all those insane risks, how can an investor possibly navigate this? Well, that brings us to our final section, a playbook for how to think about these high-risk, high-reward opportunities like a professional. First things first, we've got to totally change our mindset about debt. You know, most of us think of debt as bad. Credit card bills, car loans, and that is bad debt because it buys stuff that just takes money out of your pocket. But in the world of big projects, there's such a thing as good debt. This is debt you use to buy an asset that actually makes money, like a productive mine. The income from the asset itself pays off the loan. It's how the wealthy use debt to get even wealthier. So here's a practical framework. First, you have to analyze the cycle. Commodity companies often look cheapest right at the top of a price cycle and most expensive at the bottom. The reality is the exact opposite. Second, normalize the earnings. Don't use today's crazy high price for a mineral. Use like a 10-year average to see what the profits would look like in a normal world. Third, assess the debt. Is it good debt tied to a real project? And fourth, you have to stress test the whole thing. Run the numbers. What if revenue drops 5% or costs go up 10%? If the project suddenly becomes unprofitable, it's way too fragile. And as a pro tip, look for things like offtake agreements and government grants. An offtake agreement is basically a pre-purchase commitment from a big buyer, a huge vote of confidence, and a government grant tells you the project is strategically important. These are the kinds of signs that tell you a junior miner might actually be the real deal. And we'll end with this question, because as we're standing here at this huge geopolitical crossroads, this is really the fundamental tension of our time. We love to celebrate the innovators, the people creating brilliant new technologies. But true power, ultimate power, might just lie with those who control the raw, fundamental elements that make it all possible. The race is on, and the winners are going to shape the rest of this century.